everyone. News editor Sean McCracken here with Ryan Donn from Trinity Investments. Now, Ryan, I don't want to mangle your title, so I have cheating right here. It's Managing Partner, Chief Investment Officer, and Head of Europe, correct?
Sure.
There's nothing I left out there.
No, that's it.
Okay. So obviously last we talked at this conference was a couple of years ago. Trinity was kind of getting their feet under them in Europe. You just done the Zurich acquisition. How's the platform for you guys grown in this region since then? And how much more established do you feel like you are now?
Yeah, look, we've been fortunate. We rolled right from that transaction in 24 to closing our second deal in London, which was we acquired the Standard Hotel, and then late last year of 2025 bought the Hoxton in Barcelona. So yeah, I showed up here 3 conferences ago with nothing.
Yeah.
And now we have 3 great hotels. And we're proud not only of, to accomplish those things, but that we're buying the right hotels in the right markets to achieve what we set out to do, which is nice hotels in nice places that perform for our investors.
Yeah. And obviously, over the years, Trinity's transformed its investment portfolio. You guys used to be kind of a Pacific Rim focused investment group. Now you've moved geographically to another hemisphere. Mm-hmm. Is that just following demand? What's kind of the thesis there?
Yeah, it's following really actually, I would say demand for capital flows. So what we found was as we achieved good outcomes for our first vintage investments, which, started, in Hawaii and sort of coastal California, that we found our capital partners wanted to keep reinvesting. And then, when you require more, when you're looking to deploy more capital, you need more opportunities. So we were expanding markets, and that kind of pushed us through continental U.S. and the capital relationships that we had there have appetite for Europe. That was the genesis of us moving here. So not so much chasing assets or markets, but chasing opportunities for our investors to deploy further into the space. And we found that Europe's a great opportunity for everybody.
Mm-hmm. You mentioned the latest acquisition was in Spain.
Yeah.
Obviously Southern Europe, Spain, Italy, France, Greece has been kind of the hot spot for, travel interest and investment. Is that kind of where you guys are focusing your attention, or is it more kind of pan-European?
Yeah, what you mentioned is true. There's definitely an appetite for Southern Europe and a lot of growth story there. Greece, when I arrived, was getting a lot of focus in particular as kind of being the next best investment grade frontier of Southern Europe. For Trinity, what's hard is those deals in Southern Europe tend to be a little bit smaller. So it's tough for us to dedicate the resources that we need in terms of human capital to find deals in Southern Europe. So in the case of Barcelona, it was a little bit of, it checked a lot of boxes. It checks that Barcelona is a strong market. It's got a lodging moratorium. It's a place we wanted to own a hotel. We like the lifestyle space that the Hoxton operates in. So it wasn't, we weren't really goal seeking for it, but then when the opportunity arose, we seized on it because it was sizable enough and in the right spot.
Yeah, and I believe we talked in the past that in that region of the continent, there's not a lot of Trinity-style assets. You can't find the Diplomat in that area in general, right?
Yeah, that's right. So, already I think since I last spoke with you, my criteria for investments has adapted a little bit or evolved because I did think that, when we bought the Park Hyatt Zurich, for example, which is a pretty chunky asset in terms of value, I hope to go out and replicate that. And it wasn't until I kept shopping for the next opportunity that I realized, to hold a $300 or $400 or $500 million target vastly limits my opportunities. So we had to flex a little bit. I think as a result, we might look at more portfolios next, but try to favor still chunkier transaction sizes. However, we can accomplish that.
So for a company that's obviously you're focused in the investment side, I am curious your perspective on kind of the growth of the operator landscape in Europe, because obviously that changes the investment outlook, right? When you can plug in an established, third-party operator that can, improve yields and all of that. Does that give you more optimism going forward that more of those type of operators are kind of rising up across the continent?
Yeah, I think so. We're seeing, I think, a few both of these dynamics happen at the same time. One is the branded operators are becoming more, they're gaining more market share for sure. And when I say that, I mean the global brands like the Marriotts and the Accors and so forth, the Hyatts. And we're additionally seeing qualified third-party managers gain ground as well, right? So that can be those associated with investments like the Highgates and the EQs, et cetera, or it can be the Schultes and the Valors that are more pure play operators. But I think they're all becoming more relevant than they were prior to my arrival and probably a decade prior to that. So yeah, and it's good. I think there's a sophistication to the space that's, the reputation of Europe was that it was behind the U.S. in becoming investment grade, and I think that's changing quickly while we're here, and it's interesting.
Yeah, whenever I talk to any of the U.S. based, third party managers, they're always pitching how they're moving into Europe too, which seems to be an unending trend, right?
Yeah, well, I think I forget what the exact stat is. Something like 65% of hotels in the U.S. are branded, and it's something closer to a third here. So there's definitely market share to be gained.
Yeah.
Now the reality too is a lot of those are with private families and smaller assets, and they're not, a lot of them are older and don't necessarily have all the things that brands want. So I think that it'll never catch up to what the U.S. metrics are, but I think there's a lot of room to grow.
So obviously you mentioned that you kind of expanded the scope of what an acquisition for you guys would look like going forward, and maybe that's portfolios or whatever. But how do you define kind of what is a Trinity style asset at this point?
Yeah, so it's interesting. So in the U.S., if I can contrast it first, in the U.S. we've historically been a little bit more leisure driven.
Yeah.
We starting as a Hawaii based resort owner, and then California resorts and Florida resorts. But we've branched into urban, but I think leisure has been our specialty in the U.S. Here it's interesting because although there's great leisure markets, they're not 12-month markets, right? So they're either, we don't have the Hawaii and Florida type of climates in Europe. And so you get a lot more seasonality. And therefore for us, I find I don't love that profile. So we've been favoring urban destinations. That's why you see Zurich, London, and Barcelona as the first three. And but the theme, if I can translate one to the other, is that we talk about this all the time on investment committee. It's quality hotels and quality markets.
Yeah.
And what we find is that if you stick to that and you don't deviate too far, then you can weather the downturns and the shocks of the system, because if they're good hotels and good markets, people will come. So I think that's what that leaves a lot of intentional subject to interpretation, but that's what we're trying to achieve.
It was interesting earlier today down in the general session when Hyatt's Mark Hopelmazian was on the stage. He made a comment about, the K-shaped economy being very real. Just luckily for them, they're on the right point of the K. I imagine that, for the type of assets you guys invest and focus on, it's kind of the same situation, right?
Yeah, it is. I mean, unintentionally, it's not like we set out 10 years ago anticipating that, but we've been the beneficiary of the fact that the upper upscale luxury markets have held up, quite well. I assume that's what Mark's making reference to. And by the way, it wasn't that long ago, during COVID, when the select service market was strong and full service wasn't. So these things ebb and flow. But look, the reality is that what we have identified, and is intentional, is that the upper upscale and luxury space, supply pipeline is very, very low. I mean, it's still extremely expensive to build these hotels. It's tough to find the right sites and permittings and financings of new construction. So
especially in Europe,
especially in Europe, especially any place that has a dearth of quality sites. So the barriers to entry matter, and if supply is constrained and demand is growing, whether it's 1% one year or 3% the next, but it's compounding. We like that long-term prospect, and that's intentional.
So I'll bring up kind of the downside of what everybody's been talking about today, and obviously geopolitical conflict is kind of dominating a lot of discussion. Where are you at in terms of do you think that that's going to affect your portfolio or more broadly, performance in Europe, or are you hopeful that things will kind of clean up before it's a major issue?
Well, I'm hopeful things will clean up before it's a major issue, but I in the meantime, I'm trying to anticipate what happens if it goes longer than anybody would like to care to think about, which is to say, we're looking at signals in our portfolio, both U.S. and in Europe. We're actually not seeing yet much of any movement. I know what I've been told is that, for example, we own the Standard in London, which is in the sort of mid-market space. It's not been impacted whatsoever because, to be honest with you, we don't have a lot of Middle Eastern demand at that hotel. Now I'm told Mayfair luxury hotels are in a different story and they're seeing some impact. Zurich is an interesting market because it does get a lot of visitation from the Middle East, but generally that's in the summertime. And so, the last 2 or 3 weeks, it was the Ramadan kind of pre and post era. And we don't see, that's our lowest piece of the year for Middle Eastern travel. So we didn't lose anything because we didn't have anything on the books. So it's a little too early to call. I think Southern Europe, Spain has been a beneficiary so far because a lot of Brits and Germans who would have gone to Dubai for Easter are not. So there's a little bit of a short-term shift already being seen in some of those markets, but I'm not ready to call a long-term adjustment to travel patterns yet, but time will tell. So
beyond that, what are your expectations for the next year?
Beyond that, I still think, we were talking about this at lunch today. I think I consider the European proposition for what tourism, travel, and the visitation experiences to be the best in the world. So yes, there's a lot of great hotels and reasons to travel in the U.S., but people still the analogy I read once that I agree with is people always want to have that bowl of pasta in Rome. Yeah, right. Exactly. So that's a product that gets sold only through. I'm sorry. That's a product that's marketable worldwide. People from the Middle East, Asia, U.S., wherever it might be. I'm really bullish about the long-term demand dynamic for Europe. I'm also bullish because I do think supply is quite constrained, and therefore, we're going to have some bumps on the road. But I think having quality assets over the long run will be fruitful.
I mean, and obviously there's so much discussion about, the rise in global middle class, and you have more people traveling abroad from China and India. Like, where are they going to want to go? Like Rome and Paris, right?
Correct. That's right. And so, and Barcelona.
Yeah, so, exactly.
Exactly.
All right. Well, thanks a lot. I appreciate the time.
Yep, absolutely. Anytime. Thanks, Sean.
I'm Terence Baker, News Editor, Europe, Middle East and Africa, and I'm the host of The Upgrade, a CoStar News Hotels podcast for the EMEA region. In it, I discuss with special guests the pressures, challenges, joys and exhilaration that comes with managing, owning and developing hotels in our glorious multifaceted industry. Discovering the EMEA region from the scenic northern shores of Norway to the heights of Table Mountain in South Africa, and most likely some chat about birdwatching, distance running and the English Premiership. Join us wherever you find your podcasts, on Apple Podcasts, on Spotify and on other platforms.
This episode was recorded on March 23rd, 2026 at the International Hospitality Investment Forum in Berlin by Meredith Sheridan. It was edited for podcast by Sean McCracken. Visit costar.com/hotel news for more of our coverage and find all of our podcasts on Apple, Spotify, or wherever you listen.